Okay, hello everyone, and welcome to the ATO Insights session. While we've got people still filtering in, I will start with a bit of a fun question. Everyone in the chat today, if you can tell me what you had for lunch. Oh, come on, guys, don't be shy. Make me jealous of what you've had for lunch. Oh, homemade pumpkin soup. Yeah. Okay, there's a lot of soup going on here. Oh, and salads, healthy. Healthy, I like it. Who has time for lunch? Yeah, fair enough, Brie. I get that. Okay, there is, yeah, some sushi in here, some rice. Chickpea curry. Nice. Okay, cool. Right. Oh, a lot of paninis as well. Interesting. There's a lot of themes going on here. Okay, so we'll start to get stuck in that case. Again, as I said, welcome to the ATO Insight session. I'm joined today with Gary Mathoda. Gary's a tax director at PKF, but prior to PKF, he actually spent half a decade working at the ATO, writing the policies that some of you either love or hate. So that means you're going to be getting some really valuable insights today from someone who quite literally wrote the book. Me personally, my name is Risha. I'm the customer success manager here at Wheel. If you're not familiar with Wheel, we are the leading spend management platform in Australia, and we help finance teams of all shapes and sizes control spending and streamline their back end. Wheel are the team behind this event, but we could not have done it without our valuable sponsors. So a big thank you to everyone on the screen here. That is CFO Magazine, Visa, Fathom, Mayday, Translucent, and Trace. Now, a bit of housekeeping for anyone whose first session of the day. We really want this to be interactive and valuable to you. So we encourage you to use the chat if you've got something to say, or the Q&A function if you have a question for Gary. I will then post these questions to Gary at the end of the session. So I will now hand over to Gary to introduce himself and take you through what the ATO is focused on and good governance. So Gary, over to you.
Thank you very much, Risha. I'm hoping you can hear me okay, coming across well. Perfect, thank you. And look, thank you to everyone for taking some of their valuable time to attend today. For anyone playing along, I had a panini for lunch. I'll just share my screen here and we will get started. There we go. So, like I said, thanks to everyone for attending. My name is Gary Mathoda. I'm a director here with PKF in the Specialist Tax Division. And what I want to talk about today are really two topics, but we're going to relate the two and I'll explain how they relate. So the two topics for discussion today are ATO tax debt and tax governance. Now, what we're trying to achieve through this presentation is really to give you, the audience, the CFOs, the financial team members, an idea of really what is the ATO objective when it comes to tax debt, what is the typical life cycle of ATO debt engagement, and there are many stages, so we'll go through that in some detail, and really how can tax governance then assist and what are the tangible benefits from having tax governance documentation in place. Now, in regard to how do they relate, spoiler alert, if you've got strong tax governance practices, you're less likely to find yourself dealing with ATO tax debt problems. So that's how they do relate. This next slide is really just about myself, a bit about my background. So as Risha said, I have spent a fair bit of time working at the ATO. A key part of my role there was working in the top 1,000 Justified Trust program, and we'll touch on that a bit later. But within that, it was really designing the ATO expectations around tax governance. So I think I'm okay to talk about that. So the first part of the presentation is on ATO tax debt. And look, I think it's fair to say for most taxpayers, for most enterprises, dealing with the ATO can be quite a stressful experience. And I would say that is even more present when you're dealing with ATO tax debt. So myself and our practice here, we're assisting a lot of clients with ATO tax debts. And the experience we're seeing is quite a challenging experience at times. In fact, even a more intense experience than what you would otherwise experience when dealing with the ATO typical sort of client engagement teams. This next slide is really just a couple of articles that I was able to sort of snip to show that it's almost on the daily where we're seeing commentary and articles about the ATO and how active the ATO is being when it comes to actually dealing with tax debts. I've seen many figures being thrown around, but it's fair enough to say there's tens of billions of dollars debts with the ATO right now. And the ATO is actively trying to resolve tax debt, and we'll speak about that in a sec. I co-hosted a presentation recently with one of the assistant commissioners from the ATO, and I shared with her this sort of sentiment, right, that the ATO is being really aggressive to some extent when it comes to collecting tax debts. The feedback that was provided to me is, well, this is really a return back to normal. So from the ATO's point of view, there was a bit of a pause around debt collection and debt activity, in particular during those COVID years. But really what the ATO is now trying to do is get back to previous practices and to make sure that debts are being managed and resolved. And that word there, resolved, is actually the key part of what they're trying to do. So there's some examples here, specifically that Porto one there. I frequent that restaurant now and then myself, so it was interesting to see that there in the news too. So the question I've got here on this next slide is, what is the ATO's objective when dealing with with debt obligations? And really, it's to resolve the debt. Now, the question then becomes, well, what does that mean, right? Is that just getting the debt paid? And clearly, payment of the debt is one and the most cleanest methods of resolving a debt from the ATO perspective. However, there are other ways to deal with tax debt and to resolve tax debt. Now, some of these involve things like small business restructuring or administration, and there's deeds of company arrangements that can happen, so DOCAs, etc. So there's the business restructuring side of things, and business restructuring experts can assist if that's an avenue for exploring. The one that I most commonly see and assist my clients with is a payment plan, right? So assuming as a CFO, you've got the responsibility of dealing with cash flow, dealing with these types of debts. A payment plan is really a practical way to manage the debt over a period of time. And so I think it's very useful for all of us here to sort of talk through a little bit about payment plans, the details, etc. And we'll come to that in a sec. Now, what is somewhat confusing for a lot of people is the typical, and I put that in inverted commas, typical approach for the ATO when it comes to managing debt. I think it's fair to say that it can be quite difficult to actually find a playbook, right? I haven't found one, but there's certainly commentary on the ATO website that runs through kind of their debt procedures, processes, etc. But what I thought would be useful is for us here to actually go through the most common steps that would be seen as part of an ATO debt resolution process. And look, I think it's fair to say the starting spot for the ATO when it comes to resolving debt is offsetting any other refunds that you may have, right? So an enterprise has many dealings with the ATO. There may be refunds that are received at a point in time. Typically, the ATO would look to apply those refunds against any debts. That's kind of the starting spot. Often that doesn't lead to much, right? So the refunds don't actually equate to the debt that's outstanding. So we then progress to the next stage. The next stage, or really what I would say the first real stage when it comes to ATO debt collection efforts, is what I call a blue letter, right? So it's not too dissimilar to the letter that I've got on this slide here, but it's blue in color. And for all intent and purposes, that letter says you have a debt. Please manage the debt. Please engage with us. We want to work with you. Let's work together. Let's get this debt paid down, right? That's the blue letter. And that is the first stage. Now, something that I've heard a few of my clients say to me who have sort of tried to deal with the blue letter themselves is, Gary, the experience we're having with the ATO people with this blue letter is not too dissimilar to what we would experience when dealing with a debt collection agency, right? It can be really intense. There aren't many pleasantries that are exchanged. It's very much a direct discussion around what are you doing with the debt? How are you paying the debt? my own experience, I was actually told by a case officer, I don't care about how the weather is today, Gary, let's talk about the debt. So it can be a very intense experience. And the ATO itself has actually acknowledged that they do use third-party debt collection agencies as part of these efforts, right? So those feelings may not be unfound, right? You may actually be dealing with somebody from a debt collection agency. Uh, Having said that, it's important to note that the debt collection agency does not own the debt. So effectively, it's the ATO using them as a resource to help with the broad activity that's going on. But of course, you're well within your right to ask, are you from a debt collection agency? And you can find out who you're actually dealing with. So it's just really a point of interest, that one. Look, after the blue letter, what we then have are orange letters / red letters. And that's an example of what that sort of looks like here on the slide. These letters are what I call the quite serious letters. And they include things like threats to report the debt to credit agencies. And we'll speak about that in a second. As well as things like garnishee orders, et cetera, and we'll talk about those as well. But really what we see, and I've seen this in practice, is that the ATO is willing to report ATO debt to debt agencies, to credit agencies rather, where that debt is not being resolved. There is no engagement from the taxpayer and the ATO becomes quite frustrated. They then do take the step to report to credit agencies. What does that mean for you as a business? Well, and as a CFO in particular, it can actually put quite a strain on your commercial negotiations if these types of activities happen, right? So if credit agencies become aware of outstanding ATO debt, that then allows creditors, et cetera, to see that there are these debts there. And you'll be surprised how many times a creditor may contact you to try to renegotiate commercial agreements because of what's happening there on that front. So it's a highly sensitive time when you get these orange and red letter notices, and certainly resolution is the key before the ATO takes that step of actually going to the credit agencies. The next item I've got there is a director penalty notice. So director penalty notice has been around for a while. And really what this step is it's taking the responsibility almost for the debt away from the business to the directors. Now, it only applies in certain circumstances. So directors can incur penalties equal to their company's unpaid PAYG withholding, net GST, super guarantee charge. They're sort of the typical instances where that would occur. Really, where the ATO does issue director penalty notices, it's kind of what we would say is the start of legal proceedings. And this is where it gets particularly difficult trying to get to resolutions in a fast and short period of time. So we want to try to avoid director penalty notice as much as possible. We've also seen as part of these red and orange letters threats to issue garnishee orders. And what I will say is that in my experience, the ATO will typically call the authorized contact before doing that. But what are they doing with the garnishee order? Well, they're going to issue that, and typically they're looking to collect between 15 and 30 cents in every dollar that is owed to you, owed to the business, up to the limit of the debt. Now, this can obviously affect your cash collection, right? You would have certain projections for cash collections, etc. You need a certain amount of cash to function as a business. If the ATO is out there issuing garnishee orders, you're going to get less back than what you're expecting. That has an impact for you. So we certainly want to avoid garnishee orders. Now, like I said there, I mentioned 15 cents and 30 cents in the dollar. They're sort of the two amounts that I've seen used recently, but I think there can be different amounts there as the ATO sees fit and proper in particular circumstances. Now, failing all of that, in some cases, the ATO may take legal action to recover outstanding tax and super debts. Now, what action is taken will actually depend on whether we're talking about an individual, a partnership, a trust, superannuation fund, or a company, right? So it depends on who it is that owes the debt, the legal structure of the entity, etc. An example of a legal notice that does require immediate attention is a statutory demand. So statutory demands compel engagement with the ATO within 21 days of the issue date. and it is from the issue date as opposed to the date you receive it, or the ATO will take legal action and steps to actually start liquidating the entity, right? So we're at the really pointy end of outstanding debt discussions and negotiations. If the ATO was to issue this statutory demand, you have to, and I can't stress that enough, you must actually pay attention to that and do what it says. And we'll talk a little bit more about that in a second.
Gary, just before you move on, a question
Yeah,
from Joseph in the chat. He's keen to understand the timeframes around these issues and kind of between each notice. Do you have any understanding or visibility around that?
So it's a brilliant question. And look, the truth is I've seen very different sort of experiences for different clients, right? And now the ATO often talks about 28 days, right? It doesn't matter whenever you deal with the ATO and you ask for something, they'll say, well, it's going to take us 28 days to process. It's sort of their standard time to address any issue. So I'd be shocked if you move from one stage to the other within 28 days. But, you can go from a garnishee orders to these firmer sort of actions relatively quickly. It really depends on who at the ATO has the matter, the size of the debt. The bigger the debt, the more the urgency the ATO would see. And what I would say is most important with all of this is engagement, right? And we'll come to that at the end as well. But if you engage, you will see an experience that is significantly better than if you do not engage with the ATO, right? So my advice is always engage here, blue letter. Let's not get to orange and reds. Let's just not get to orange and reds. Let's deal with it with blue. But of course, it doesn't always play out like that, and certain discussions can happen. So look, I would say 28 days at each stage, if you want to think of it like that, is probably a fair expectation. But it can vary. It can certainly move around. Good question.
Yeah, thank you. On behalf of Joseph.
Yeah. So like I said at the start, right, when it comes to actually resolving the debt, there's those sort of three methods, right? Pay the debt. The other one is talk to your business restructuring experts around various options that are available. And the third one was payment plans. And this is something that I spend a fair bit of time on at the moment on behalf of clients negotiating these. And the challenge with this is, again, it can be quite hard to find commentary as to what the ATO is looking for when it comes to payment plans. And in my experience, no payment plan is the same, right? For a business and as a CFO of a business, you're dealing with different facts and circumstances. You're dealing with different size debts, you're different payment schedules, timeframes. You may be looking to realize some assets, which can take longer for the cash to come in. There's all these different things, right? So when it comes to payment plans, I thought we would go through really some of the key experience learnings that I've got, and I'll give you some tips and tricks there, and hopefully that can help to demystify some of this when it comes to actually negotiating a payment plan. So look, in terms of requirements for payment plans, when you speak to the ATO, the ATO debt side of things about payment plans, the thing that you will hear first from the case officers is for us to entertain a payment plan, all outstanding compliance obligations must be up to speed. So that's IASs, BASs, ITRs, etc., etc. Most case officers will say that is a non-negotiable, right? They want to know what the debt is and if there is anything further to come, and that can only be known through compliance lodgement being up to speed. Now, while they say that's non-negotiable, I think it's fair to say everything is negotiable in life. So it really does come down to discussions and understanding of why things are where they're at. So advocacy on the behalf of the client is very important. Something else that the ATO would typically want to see is that the business is serious about managing the debt. And what do I mean by that? The ATO wants to see that the contributions are being made to actually pay the debt down. Now, when I'm dealing with clients, typically I like to advise that we look to pay as best we can, at least 10 to 30% of the debt upfront, right? Even before we have the call with the ATO around negotiating the debt plan, the payment plan, we show them that we're serious, we show them we're capable of paying, and we pay what we can, right? It's always just a good idea to do that. And if you don't do that, when you go to enter into the payment plan, the ATO will ask you to do that anyway. So why not do it voluntarily? Now, in terms of timeframes for these payment plans, how long can we get, right? It's always a question I get asked. How long can we get, Gary? The ATO case officers are basically trained to say that they would like the debt resolved within 3 months, right? That's kind of their standard practice, 3-month payment plan. I think it's fair to say a 3-month payment plan is, for the most part, achievable because they want the debt resolved themselves, and 3 months is not that long a time frame for that to happen. What we find realistic, though, for clients is that most need up to 12 months, right? 3 months isn't going to cut the mustard. So you kind of do need 12 months. And at that point, the ATO is looking for more information, right? They're looking for what we refer to as capacity to pay. So the ATO wants to make sure that if you're looking for a payment plan that is longer than 3 months, you've got the means to actually be able to comply with that payment plan without essentially going broke. That's what they're looking at, right? So they'll say we need capacity to pay information. What are they after? They might be after some management accounts for the last couple of months. If you're looking beyond 12 months, if you're looking for a payment plan that lasts 2 years or 3 years, well, the information requested will be more significant. It could be financial statements, it could be statements from certain banks, whatever it is. So just be ready with that, and always have a think about what information you have handy to be able to evidence that you can pay those debts. Look, the ATO prefers uniform payments. So if you have a payment plan for 12 months, they want equal payments each month for over the 12 months. Of course, like I said, there will be circumstances where that's not practical. For example, if you're having to sell real estate assets to pay down some debts, it can take time to actually sell real estate, right? And you may have delayed settlements, you may have all these things going on. So the ATO isn't, they are relatively understanding when it comes to these types of things. But again, it comes down to how well you advocate and explain why you need those terms along those lines. Now, in terms of key tips when it comes to these types of payment plans, first and foremost, engage early. Like I said, we want to hit it at that blue letter. We don't want to let it get to red, orange. We certainly don't want to be speaking to them for the first time when we see a statutory demand. It's just a completely different experience, and it can just be a very stressful experience the longer that these things are allowed to roll. I think get all compliance obligations up to speed, very important. Where a payment plan is agreed, do not default. Now, I know that sounds quite simple, but you'd be surprised at how easy it is to actually forget a date, right? You may enter into a payment plan today and have the first payment due in 2 weeks, and you just forget. So what I'm saying is we cannot forget. We have to have those calendar reminders, make sure we hit those payments. Now, that's particularly important for the existing payment plan that you would enter into, but also for any future payment plans that we may want to enter into. So the ATO case officers will often say, if there was a default on a payment plan in the past, they're just not going to entertain a payment plan at that point, and they'll look at those firmer actions. Like we said earlier, have the capacity to pay information readily available. Think about how long you're after. Think about what they might want to see. And then when it comes to stat demands, look, I'm not going to make too many comments here because that is a legal sort of area, but you want to comply, right? And so, as I said, most stat demands will say 21 days from the issue date, and there will be an issue date on there. What's really important with a stat demand, in my experience, is that satisfying a stat demand either requires payment of the debt or entering into a payment plan with the ATO by the 21 days. Now, in my experience, entering into a payment plan with the ATO within 21 days is very difficult, right? Because, like I said, they've got a standard 28-day service period. So it can be quite challenging to get all that to sort of fit into a nice time frame to make sure you're complying. But again, early engagement helps with that. And I think, look, getting a tax expert to help you engage with the ATO on this stuff is really important. They should have the right experience, having dealt with the ATO, having successfully entered into payment plans, and hopefully they can go through all these tips and tricks with you as well to make that experience less stressful and more manageable for yourself. So I think that's really important. Risha, what we might do is we'll come back to other questions at the end because I can see I'm already starting to run out of time, but I do want to cover tax governance because this is also really important. So look, with tax governance, as we said, when I was at the ATO, this is something that I was particularly focused on. tax governance for me is really about the how things are done, not what was done, right? It's about the processes and procedures, not necessarily about the outcome. And so, as you can imagine, from an ATO point of view, if an organization has strong processes and procedures in place that help to manage the tax risk, well, then that gives the ATO some comfort, right? And that's kind of the messaging from the ATO when it comes to this. So, what is tax governance? When we talk about it in a tax risk sort of management space, but really it's about having those clear processes and procedures in place in a documented corporate governance framework, right? And that word documented is very, very important. The ATO, through the various engagement channels they have, will stress to taxpayers, to businesses, that you must document your processes and procedures for the ATO to really be able to give you some consideration in various discussions. So documenting it, very, very important. I like to always give a bit of background around how did tax governance come into the ATO's sort of focus. And a lot of the history around that comes back to the government of the day, I think it was about 7 or 8 years ago, had a particular focus that they actually wanted to give the community confidence that large businesses in Australia are paying the right amount of tax, right? That was the focus, and it was all in the news. Again, I could have pulled up a stack of comments, articles about that. And they decided to give that mission essentially to the ATO, right? What did the ATO do? The ATO went to the OECD and thought, well, we can't be the only ones trying to do this. And the OECD at that time was developing this concept of justified trust, right? What is justified trust? Justified trust is essentially building trust between the regulator and large business that they're doing the right thing, right? And how do you do that? Well, they came up with a methodology. Now, in Australia, we tailored what the OECD was developing for our own purposes. And it started really with the ATO taking that idea to the top 100 largest companies in Australia, right? They went to the top 100 largest companies and said, we want to do a justified trust review on you. And everybody said, well, what's that? And they said, well, here's the outline of it. But above all else, we want to understand what you're doing for tax governance. So that's where tax governance came about. And since then, what we've seen is the ATO cascade this justified trust methodology through different populations of taxpayers. So like I said, started with top 100. They then went down to top 1,000. And that's where I spent a lot of my time at the ATO. They then took that to the private wealth space and said, well, let's look at the top 500 private wealth groups in Australia. They've now expanded that to what they call the next 5,000, right? So you can see it's sort of cascaded from really top end Australia, corporate Australia, through to businesses of typically around $50 million in controlled assets. That type of size is where this is now a focus for the ATO. Now, I know over the last couple of years, there's been, I think it's fair to say, a bit of a hope from many that this methodology would go away, that the ATO would go away from this. Whereas what I would say, the ATO has actually doubled down on this, right? So they've decided to continue this. They're using it across different populations. And like I said, it's cascading through different size populations, and it is here to stay. So tax governance is a key component of that justified trust methodology. And it's about documented processes and procedures. What people often say to me is, Gary, where in the legislation does it say, right? I have so much to deal with. Where does it say in the legislation that tax governance is required? The truth is, it's not in the tax legislation. You will find it on the ATO website. So if you're part of certain populations, they will say there is an expectation that you have tax governance documentation. And for the larger end of town, it's not actually enough to now have that. You should be further along the journey. So tax governance is seen as a journey. It's recognizing the need. It's then documenting. It's then reviewing it for effectiveness, and then et cetera, et cetera. So for larger businesses, it's more of an expectation that you're further along that journey. But for others, it may not be clearly articulated on the ATO website that there is an expectation. So really, what is the benefit then, right? So as a CFO or a member of the finance team, you've obviously, you would be used to, I think, having processes and procedures for managing many types of risks. And so tax governance documentation helps you manage tax risk, right? So it's internally, there's a lot of use there. Practically, I myself have seen it given a lot of consideration to when it comes to penalties and interest decisions made by the ATO. So what I've put up here is a little extract from a position paper that the ATO issued to one of our clients that we picked up at the audit stage. So we helped them with their objection. And during that process, we were able to also put together their tax governance documentation and have that pulled together. Now, this taxpayer was not in any of those populations where the ATO would say you need tax governance documentation. However, they went ahead and did it and pulled that together. What you will see here is the ATO case team said these governance measures are likely to reduce the risk of similar compliance issues arising again in the future. Implementing these measures demonstrates that you are genuinely trying to comply with your tax obligations. Accordingly, allowing further remission is consistent with the objective of encouraging entities to take reasonable care in complying with their tax obligations. For these guys, that was effectively $200,000 remission in penalties and interest, right? So, and this is not the only taxpayer or the only position paper where I've seen that comments used. So we can see the ATO is giving credit to those that actually have appropriate tax documentation in place from a tax governance perspective. Typically, when it comes to tax governance documentation, there's 3 stages. The first one is, does it exist? Second one is, has it been designed effectively? And what the ATO is doing there is looking at whether the governance documentation that is in place meets the requirements that the ATO would expect for those taxpayers, right, of that size. And the third one is the actual framework operating effectively? Meaning, are you undertaking testing to see, does this thing actually work? Right. So there's the 3 different stages. So yeah, that's a fair bit about tax governance. I'm just looking at the clock, so I might summarize what I've sort of said. But look, I think first and foremost, engagement with the ATO is critical, right? Like I said, this can be a very stressful time. Any engagement with the ATO can be a stressful time, and that's understandable. But the worst thing you can do is bury your head in the sand and hope that it goes away. It's really engage early. And I think as part of that, if you're assessing your current framework for tax governance requirements, etc., it's really important because that can come in very useful when it comes to negotiations with the ATO. And I've got there, just work with your trusted advisor because they should have the experience to actually guide you through that process. Especially with the engagement piece. And yeah, of course, if you have any questions, I've got my email there. Very happy to take any questions now, Risha, that you might have.
Yeah. Look, first of all, thank you so much, Gary. That's really insightful takeaways. I don't think I've ever seen that order of notices put so simply, and it's just much easier to digest in that form. We've got a
Thank you.
couple of great questions here. 2 people have asked, what would the ATO consider as large debt that I guess constitutes chasing faster or sooner?
Yeah, great question. So I think, again, that depends, right? It depends on the industry the taxpayer's in. That can even be a factor. It can depend on who are the directors of the business, whether there's a particular history there. There's a lot of things that come into that.
Yep.
What I can say to that is if the tax debt is greater than $1 million, then there are specialists within the ATO that deal with those, right? And the escalation processes in the ATO are such that anything over about $250,000 will need to be escalated. So whoever you're dealing with as the case officer, they'll only be able to take your matter so far before they have to escalate it for approval. A tip, though, is work with that person and engage with that person because really they have a lot of sway in the ultimate decision that's made. So it's a really good question. Anything over $1 million is certainly in the big bucket, and there would be urgency from the ATO to deal with that.
Yeah, makes sense. I have Lauren asking, well, they've been asked for capacity to pay calculations, and it's a requirement that they need to enter in order to make payment arrangements.
Yep.
They're a project-based business, so they're having difficulties forecasting.
Yeah.
Have you got any alternate avenues for that kind of in situation?
Look, I actually think the best approach there is to explain exactly that to the case officer, right? So I can give you an example where I have a client and they had a substantial ATO debt. They came to us with a substantial ATO debt. Now, the only way they could manage that debt was through realizing certain assets, et cetera, right? They had to sell certain assets, and that was going to take time. Now, the ATO case team at the time said, well, give us your capacity to pay information. that was never going to show that they were able to pay the debt, right? Like it just didn't clean up like that in a very presentable way. So the explanation to them was, well, what you're after is not going to meet your requirements for these reasons. However, the way the debt is going to be managed is by this methodology, right? For example, in that one, we're a project-based business. We will get, the cash flow is expected as follows, and this is how we will manage it. So it's very much, like I said, engaging with that person. And look, I'm trying to break this down as simply as I can, but I appreciate that it's not always easy, right? It's not always easy, and um, like I said, I've been told that they don't want to talk about the weather, right? So it can be quite a tough conversation,
Yeah.
but it's about being persistent. At the end of the day, the ATO is trying to resolve the debt, right? It's not in their best interest to turn everyone away and say we don't want to enter into payment plan, because it is actually a very effective means to deal with debt. So I would suggest there, be persistent, be very clear in your explanation around cash flow forecast expectations, and see how that goes. Failing all that, ask for it to be escalated. All right, because sometimes the person that you're dealing with is just not the right person to talk to.
Yeah. That was actually a follow-up question. Is there an option to ask for a different case manager? So escalation makes absolute sense.
Yeah, so escalation makes sense, and also what you'll find is quite often there is no case officer as such that is attached to the file, right? It is almost luck of the draw sometimes. Whoever you call a number, whoever picks up, you'll very rarely, if ever, be given somebody's direct number.
Okay.
It's you are calling like a call center, and it is being directed to somebody. And just because somebody has looked at something doesn't mean that they will continue with that matter going forward, right? They may go on leave, whatever it is. So it's more a particular team will be looking after it rather than an individual. So
Okay.
you can always try to call back and see how you go through that channel. Um,
Yeah.
it's yeah.
Yeah, fair. Good advice. Thank you. So another question is, how likely is the ATO to grant more than one plan? For example, if March BAS is on plan and then it comes to June, are they likely to allow a June BAS to be added to the existing plan? Do they open a new plan? What happens there?
Uh, so what I would say is that they are likely to add it to a new plan rather than add it to the existing one, just because I think it's easier from them from an administration point of view, right?
Okay.
Um, in the end, you should get the same experience though, right? Like you'll still have the same sort of payments to be made and that kind of thing. Uh, what I have seen is that when it comes to managing debt across multiple entities, for example, that is a really difficult thing. So when it comes to multiple entities within a group with debt, the ATO, in my experience, will essentially refuse to have one case officer look after the entire group's debt issues. They want it looked after on an entity by entity basis,
Okay.
which means for you or for your advisor dealing with many case officers, for the various entities, etc., and a very time-consuming exercise. A little tip there would be when you call back each time, try to refer to an activity ID from a previous discussion you've had.
Mhm.
That should hopefully shortcut the discussion somewhat, right? So the case officer will often say, no, we can only talk about this entity or this particular debt. But if you say to them, hang on, just please refer to this ID, then they will typically do that, and that can make the process a bit smoother as well.
Yeah, I guess it's the same as calling a telco company, right?
Basically.
Question from Diane. What is an example of tax governance documentation?
That is a great one. Often I'm asked quite often, Gary, do you have a template that I can use?
Yeah.
Right. And the truth is, this is not a one size fits all type of solution. The requirements in different industries will be different. The requirements of different taxpayers will be different. And the way different taxpayers manage their process and procedures is different, right? So uh, there is really no example, but fundamentally, what you're breaking it down to is what I would refer to as board level responsibilities. So the ATO is particularly interested in making sure that the board itself, if assuming there is a board, is kept up to date with tax matters. Right now, that doesn't mean you have to run to them every day, because they have an appreciation that there's management level controls as well. Right,
Mhm.
so it's the board and then the management, and how collectively they are managing tax debt. So really, not tax debt, but rather tax governance and risk across the organization. So really, it's about having documentation that supports all of those processes and procedures, right? How is it that management has a focus on tax? What is it that they're doing? Are they using an advisor? How often are they speaking to the advisor? What is the scope of that engagement, etc.? And then at what times do they go to the board to say, hang on, we have a tax issue here that we need to bring to your attention, right? Now, you wouldn't do that every day, but maybe you do that every 6 months, right? And when you have these board meetings, somebody from tax attends and gives a bit of an update on tax. It's that sort of thing that we're looking to capture in tax governance documentation.
Nice. Thank you. I have Joseph again. Second question from Joseph. He's asking, is it fair to say that one of the big payoffs from complying fully with a payment plan is that often some or all of the GIC and penalties will be remitted once the payment plan is completed?
So, I mean, that's again a brilliant question from Joseph, and I think it's fair to say that, look, 12 to 18 months ago, I think the answer is yes, right? Today, the answer is a bit unclear. So there is a direction at the ATO right now. It's come from, I believe, the new commissioner, to not be as generous when it comes to remission of interest and penalties, right? You need really strong, compelling reasons as to why that interest should be remitted. And ATO procedures internally have been updated to reflect that. So I don't think it's fair to say that it's a guarantee. But if you do comply with a payment plan, you do everything you can, then that does form a very compelling reason for a case officer to actually look at GIC and penalty remission.
Nice. Okay. Good advice there. And look, conscious of time, so one final question. What is your opinion about robo-debt?
I think, look, I probably shouldn't say too much about that one. I think enough has been said in the media about that one. And as far as I know, the ATO has moved away from robo-debt, right? There is this conscious view from the ATO to have more of a personal touch, personal engagement, etc., around debt. And that's certainly what I'm experiencing and seeing. So I might leave that one with that.
Very fair. Look, again, Gary, thank you so much for your time. Sorry, getting a phone call. So sorry. Worst timing for that. Apologies, guys. But we are wrapping up anyway. So just for everyone who is here with us for the full day, our next two sessions kick off at 3 p.m. You've got a tough decision. There is two sessions you can choose from. Session one is Let's Chat GPT about the future of AI in finance. And the second session is Best Practice Tips from a CFO consulting over 100 startups and scale-ups. So you get to choose between the two. However, as a reminder, we are recording all sessions and we will send you recordings afterwards. So if you can't attend both, of course, we will send you those recordings. Thank you, Gary, and thank you, everyone.
Thanks, everyone.
Yeah.